Good morning, traders. This is your early morning briefing from Chris at thetradingmentors.com, and it is the 31st of October. It is non-farm payroll week, so we don't expect much in terms of trends for the US dollar. It's just not going to happen until the data is out tomorrow. That is simple. What I'm going to do for you this morning in the early morning briefing is to give you a breakdown of the gold on steroid software, so you get a better understanding of what you're looking for and how to do top-down analysis first thing in the morning or just before New York opens, so that you can get better entries. Now, before I start, there's a couple of things. Let's get rid of that. Let's get rid of that. And what I'm interested in is where the fair value gaps are, these blue blocks here on the left. So what I've done, I've drawn some lines at the top of these areas and at the bottom of these areas, so they're lines or prices of interest. So that's the first thing, and what I've done, I've emulated those at on the 5-minute chart, which is what this is, I think, unless it's 30-minute charts at the moment. So that is there. There's another one here at 27.78. Let's get rid of that. There's a support line there, 27.78. There's the top of that fair value gap, and there and there. So these are going to be areas of interest. Now, one of the things you need to know is whether the price is trending. We know it's not, but we can go down to the 10-minute chart and we can see that the background, first of all, is green on the 30-minute chart, but on the 10-minute chart, have a look at the 15-minute chart, is still green, but the 10-minute chart is red. And what that tells you is that the price is swinging rather than trending. So what's going to be happening today, highly likely today because of the NFP tomorrow, is the price is going to be moving up from into this area here. That's the wrong color, gone to the light side, and there's probably going to be a reaction here or here. It could be a fake breakout, and then the price reacts and comes down accordingly back down into these areas. Now, if we have a look at these areas, we can say that if it comes up to here and down to there, there's 150 pips. Or if it comes down to this area, which I'll be very interested in, then it goes back up, there's 130 pips. So there's plenty of room for lots of profits during the day. So let's give that, once we've established the fact that the price is not trending, and you do this every day, once you realize that it's not trending, then we can presume that until it does start to trend, it will be swinging to and fro these important areas of interest. So let's break it down a little bit more. So once we've established that the price is not trending, we can look for swing trades within those ranges or within those lines that I've drawn to get an idea of what the reaction is going to be on those points. Once those points come in, of course it's early, so the price has no volume in it, and of course we have to wait for volume and liquidity to confirm a trade. One of the things which is very common within the gold on steroid system is outside bars. Now, it's not pin bars. What I mean by that is I want to see the price move outside of this channel here. Once the price moves outside the channel, this means that the price has gone too far too quickly and is highly likely to be a sharp reaction. The other thing I want to be looking for is convergence of events. Now what that means is I want to see at least 2 reasons to be buying. 3 would be great. One of the most powerful things is divergence. If you've read my book on divergence, this is a common theme for most professional traders. But this tool here, there's one there as well, there's one here as well, are automatically drawn on your chart. You haven't got to do any calculations. You haven't got to do anything at all. It will actually go red for a negative or it will go green for a positive before the price actually reacts, by the way. So positive divergence and negative divergence are leading indicators to tell you that the price in the future is going to go up, or in the future the price is going to go down. Now how far it goes down we don't know, but we can predict that we can easily expect to get 2 times risk, something like that. 2 times risk is fine. We can easily expect to get 2 times risk. Something like that. And same down there. So yeah, so but what I want to see is convergence of events. So I want to see positive divergence. I want to see an outside bar. I want to see the price in a liquidity zone, different from an order block. Liquidity zones are really important for immediate action. There's one there, immediate action. In other words, what's happening here with liquidity zones is retail traders across the world are buying into the fact that the price is going up, and of course we'll be taking out their stops. That is how it works. That is life. Sounds a bit cruel, but that is what happens in trading. Now in this instance here we can see that we do have convergence, we have divergence, albeit slight. We have a convergence area into an order block here, and we have liquidity as well. So that is a great trade, easily 2 to 1 there. In addition to this outside bar, the price has come down too far, too quickly, and then it's hit this order block, this buy zone here. Immediate action is required. Okay. So I'm looking for a convergence of events that will cause me to get in immediately, and it's usually when the price becomes oversold or outside bar. Outside bar, you can see these are quite common actually throughout the swing trading session. Now of course if the price starts to trend, then there's a different way of doing it and dealing with it. But I'm looking for extreme price action. Now remember that trading gold takes a lot of skill. If you're just starting out and want to be a professional gold trader, you're going to have to go through a lot of pain. You're going to have a lot of tenacity and a lot of practice. So use demo accounts, and practice, please. Because it's really important that, for instance, if you get it right, and eventually you will, once you get it right, then one lot, which is a very small amount, but nonetheless, one lot will bank you thousands of dollars per week. Easily. Because the average true range of gold is way beyond that of any currency. You can bank 100 pips very easily within an hour. Quite common to see that. So even though it may seem tricky, it may seem that you might not get hold of it at some stage and you want to give up, please don't give up, because it'll be worth it in the end. And that's where we come in. And I'll be posting these charts onto YouTube live, and well, during high volume times anyway, just to help you along. But let's have a look at the other tools that we use. Now I'm interested in where the price is in terms of price cycle. So the price cycle in this instance here, we can say that number one, the price cycle is very low at this point here. And also the money flow, special settings, by the way, these are not standard settings by any means. No one else will be trading like this. No one else will be trading like this, and that's what you want. You want to be one of the few, one of the 1%, and you'll make all the money. So here we can see that the money flow is below 20, and so therefore is highly likely to have a reaction So we have a number of events occurring at this point here. We have an outside bar, number 1. We have an order block, number 2. We have liquidity zone here. And then we have an event where the oscillator is oversold and money flow has gone below the 20, so that's oversold as well. It's highly likely to have a sharp reaction. Don't wait for anything. This kind of trading, when you're swing trading, you don't wait for any buy signals or sell signals. You're just looking for a number of events to be occurring. Now in this instance here, where the price, that was your trade, by the way, 2 times, somewhere up there. There was an opportunity to come back in here, wasn't there? If you can see that there, the way the price has moved outside the bar, outside the channel, number 1, back into the buy zone, number 2, and there is divergence here as well, positives. So that was enough to make a trade. And of course, the other thing to bear in mind, once you get into the positions really early, by the way, then your stop is really tight, often within 20 pips. So you're risking like 20 pips at this very point here, this very point here, at this very point here, to make 100 or 40 or 50 or 60, whatever you want to aim for. Now in terms of targets, what I would be doing here, I would be buying here, and my target would be here. Makes sense? If I am selling here, this outside bar here, I'll be aiming for somewhere around there, this support area here. Now also, I would aim for 100 pips. If you go for 100 pips, that's pretty good. And it's very good, isn't it? Especially if it hits it within an hour. Then, of course, we can just hold it until it hits your target. So, in conclusion to this coaching lesson, I'm going to go into the markets in the next few minutes to look at the positions we have open. We're doing really well this week in terms of the parabolic trends. But I want to sort of highlighting what we're looking for. We're not looking for anything at the moment, but if the price comes up to this area, I'm going to be interested in selling and seeing the reaction. Do I have enough information? Is there enough confluence in the market to say confidently that there's an outside bar, it's on liquidity zone, it's in a selling area, is the money flow overbought, etc., etc. The other thing, of course, is I've drawn these lines from the top-down analysis, and I'm going to be interested in there. I'm going to be interested in there, and I'm particularly going to be interested in there, this buy zone here, again at 27.73. So let's see how it plays out today. It's Thursday, the day before NFP, so we may find it all go sideways, but you never know. We have to see how we go. Let's have a look at the other markets. I've done a blog yesterday on the Aussie USD on the lower time frame on the 4-hour chart, but this daily chart gives you a good indication of a possible trade. We can see the long-term trend is slightly up, but I think there's going to be a change here in the next 24 hours or so. So it may kick in after 1:30 tomorrow if the dollar goes weak. So any price when it moves above 66.30 is highly likely to be a reversal and then head for 68.13, 15, somewhere like that, giving you 182 pips. But again, it's speculation because at the end of the day, it's based upon fundamental news coming out in terms of non-farm payroll. So let's go into the positions that we've got open. We have the Aussie Swiss heading for target. All the sellers are in. Fantastic news still. And what you want to be doing here, traders, is making sure that all you do is just check it. Are all the sellers in? Yes, they are. Just relax. It'll go down to 56.50 in the next few hours or the next 24 hours. New Zealand Swiss, exactly the same. This is broken of the support lines now, so that's even better. Hold. Are all the sellers in? Yes, they are. So that's good news. So we can just leave it. And what we will be doing, of course, now one of the rules for us, whenever the price moves below the blue line, special settings, then of course the price continues down. So we can actually use that information, can't we, to move our stop. Even though the price is not doing much, we can actually still minimize our risk, something like that. Because it's in a parabolic trend anyway, we can reduce our risk to 30 pips, maybe, something like that. So even though we may risk 2%, my figure is 2%, by the way, I'm not bothered if I get stopped out, am I, if I'm risking 2%, and that should be the same attitude for you. But what I am interested in is reducing that 2% to 1, or even getting to a point where once it starts to move my stop to break even, and then I've got a free trade. And target here in this case is 49.89. Aussie New Zealand to the downside, we do have all the sellers in still, so relax, it's fine. We have a lovely liquidity zone there. Can you see that? The red zone, which is perfectly fine. And if we are long on this position, it comes out into liquidity, then of course we can just bank our 200 pips. So we do expect this further decline. And again, in the same way, we can just relax, just move our stop just above the blue line maybe. So our stop will be up here initially with 2% risk, reducing it to 1% at some stage, and then have a free trade. So the target in this case is 108.52. Don't know why I've done that, but there must be a reason on the lower time frame, so stick with that. Pound New Zealand, congratulations if you traded this one. This was lovely. 489 pips profit. And you can see that the price spiked up into this order block here. So I did have a bigger target up here, but sometimes you're better off just reducing it slightly. I mean, 489 pips is a good number. And also, in addition to that, the Aussie New Zealand, it usually goes the same way, is a short for us. So it indicates further downside momentum is likely. Now, unusually, the Euro New Zealand, so this is a Euro story rather than a New Zealand story, is parabolic to the upside. Are all the buyers in? Yes, they are. So we just stick with that. Just relax and let your price go. Now I've got a target here. Should be up there, 184.25 into liquidity zone here, where we might have another trade, as you can see. So we had the breakout here. This is a late trade. You could have gone in down here and still be in it. You got in about there, and so continuation is likely. Now in this instance we can move our stop, can't we? Can you see that? We can just relax, move our stop to 179.55. So if I had a 2% risk, which I would have done, it's now a 1% risk. New Zealand Canadian to the downside, not doing anything whatsoever. So I'm not keen to move my stop quite yet. I want to see the price do something. There's a fair value gap just below our stop loss, so it could spike up to that and then move back down. So I'm happy to hold this. It's not a problem. 81.39. Aussie Canadian is to the downside. There is an FEG there, 90.68. Pound Aussie to the upside. I didn't trade this. There was an order block here at 197.06. Euro Aussie was the trade and is the trade. A better trade because there's no resistance lines until we get to 165.92. So a couple of hundred pips in profit, probably 150 pips, whatever it is, doesn't matter. But nonetheless, this is what you're looking for when you're dealing with parabolic trends. Just make sure all the buyers are in. If you see a red dot, then just pull out, take a couple hundred pips and move on. So looks like we're going to be hitting our target today, 276 pips. So congratulations to all VIP members. Let's have a quick look at gold, see what's going on. Nothing is going on so far. It is 10 to 6 in the morning. It's still early, so we could see some action in the next few hours. So if you have any questions, if you want to become a VIP member, if you want the charts, there's 50% off. It's last day today. That's it. It goes back up to 995 today. Too late. I don't make these offers very often, but if you want to take advantage of them, you can. Have a wonderful day.